Hello and welcome to another episode of our Family Business Podcast. My name is Midya. I'm a tax lawyer here at Tamimi, and I'm here together with my colleague Izabella, a partner in corporate structuring. Welcome.
Very good to be here with you, Midya.
Thank you for joining us. So Izabella, we're here today to discuss about families structuring and advising families on their ownership structure of their business. You work a lot with families in the region, GCC nationals, but also international families from around the world. And you advise on sustainable, global, robust structures and how to own their assets in the UAE or globally. So when you advise, what are the key aspects and let's say the key questions that you and your team think about and ask your clients when giving this advice?
Yes, well, we usually start with what is your family comprised of? Who are the members of the family? What are the assets that you own? What are the classes of those assets? Where do you own the assets? Funnily enough, very often clients actually don't know where all of their assets are. They need to think about it. We talk to them about their plan for the future and inheritance as well. But we focus on two different areas. And again, it's for the family to tell us what they would like to achieve. Some families will come to us and say, we would like to get a structuring advice, but our objective is to make sure that our business follows best corporate governance practice over the lifetime of the family patron. But there are also those families that say, you know what, we're not so worried about today. Today things are functioning well. Children are involved in the running of the business already, but we are all worried what would happen if the father or the parents or the uncle would pass away because they have significant involvement in the business. They have managerial powers as well, and perhaps they are, the ones entitled to shares within the business structures. So these are the key things that then we discuss. So of course, maybe all the details will be different from the family to the other, because then answers to those initial questions are very likely to drive and inspire further questions. Then we go into digging and we make those discussions very specific to each of those cases that we are discussing.
Very interesting. So that's the first stage when you kind of help a family. But when certain families are sometimes more, let's say, evolved, and they have even maybe thought about having something called a family office. Could be even an individual being a family officer and managing it, but it also can be some sort of a, let's say, a legal vehicle. Would you mind explaining a bit more about that?
Yes, I think that's a very good question, because you would have seen, I'm sure as well, with some of the clients who will come and say, oh, we would like to have a family office. And then slowly but surely, when discussions continue, we may realize that essentially they would like to have a corporate entity that they would consider to be their family office, but the licensed activities of that entity may be different than the family office. What do I mean by that? Well, families can own their assets through holding companies. They can use proprietary investment vehicles. They could also utilize foundations. So we have foundations that are very popular in the Dubai International Financial Center. Abu Dhabi Global Market introduced foundations a number of years ago. Ras Al Khaimah, one of the free zones, has foundations. So we then say to the client, well, there are many options for your family office vehicle. You can have entities that will actually be typical family office structures, where you have somebody that you hire who will be looking after your assets, who will not necessarily be the members of the family, and then the licensed activity will be single family office. But we can also say, you know what, maybe all you actually require is a robust structure with the use of proprietary investment vehicles. The final thought on the entities I would like to add is that there is an entity type that the free zone, the World Trade Center that offers it, calls multifamily office. Now, I would like our audience to remember that a multifamily office is a different animal altogether. It's actually an entity that is used by advisory firms that would like to specialize in advising families, and because they will be advising a number of families, they then apply for a multifamily office license. So that multifamily office is not available to families, it's available to family advisors. It's a consultancy type of a license, if you like.
Do you see a lot of these family offices being established here in the DIFC or ADGM?
Yes, in fact, a number, and the number is increasing. For the past years, we've seen a huge influx of families from outside the region, for example. So there are a number of Indian families, so the subcontinent has been active. I think Asian structures that used to be very popular. So, for example, Hong Kong and Singapore used to be the hub for a lot of family wealth, but due to political developments and also, of course, the COVID pandemic, right? And how the situation changed for those businesses and travel arrangements and ability to really, move assets and move themselves, right? From those jurisdictions made a number of high net worth individuals and family businesses start considering the UAE. So we see more and more. Also, if we think about families from the region, of course, Emirati families, they look into those solutions. They would like to move towards something that is more organized because, of course, passing on the wealth to future generations is something they take very seriously. And for the UAE specifically, being a young nation, we have seen those older generations actually exiting the active business life. So that need has become really very apparent.
And I think you might have also seen quite a lot from Europe, considering let's say, the geopolitical situation there, and families coming from the more established European countries that we might have thought back in the days they would not have brought their family offices here.
Completely. That's and it is a very good point because with both of us, we've worked with European families a lot, right? So I have seen a lot of interest. Those jurisdictions that would traditionally attract European family arrangements. So, for example, Switzerland, we would think about Monaco, Liechtenstein, the Netherlands, also a very popular jurisdiction. I think family businesses, for a number of reasons now, are looking into different options. The UAE has, over the past years, become a very truly attractive place to live for education of children, for healthcare. So it means that, a place as a place to live could be a very good option. On the taxation side, and of course, you will probably share something with us under another episode on that topic. But there have been I think it's much more attractive for a lot of those families to have structures through the UAE or GCC solutions rather than the European ones. And there is also a contributing factor of, I think, privacy. A lot of secrecy arrangements that in essence gave privacy and confidentiality to families. A number of families that we advise are really wealthy. They have extensive assets, but they would like to continue living life privately, low profile. And it seems really the UAE is a very good solution for those purposes, to make sure that the wealth-related information stays with the relevant parties only.
Very interesting. Thank you. I can speak about family offices with you the whole day, but let's move on to a new topic, something that also is quite interesting. So we hear quite a lot about trust structures to hold, let's say, most often is it offshore assets outside of the region, perhaps. And we hear about the trust and having a service provider managing the trust. But there's a concept called private trust company, and it's actually something that today can be used here in the region in ADGM and DIFC. Could you please tell us more about it?
Definitely. In a number of common law jurisdictions, trust arrangements really have been well established, but usually, a trust structure is a structure structure whereby there would be a registered owner of assets. Usually that registered owner would be a professional entity. It would be a trust administrator that will create a dedicated vehicle for the ownership purposes of those trust assets. But the ultimate ownership of those assets and the benefits will be going to beneficial owners. So in our context, those beneficial owners would be members of the families that we assist. The region has trust regime under the IFC law and ADGM legislation. But despite the fact the legal framework is comprehensive, we haven't really seen trust administration entities on the market who would be prepared to hold assets in the region on behalf of those beneficiaries of structures. And there is a solution for that. It doesn't mean trust structures cannot be used. Actually, they can, and they are very good structures for a number of different family businesses. But in absence of that trust administrator, we then suggest to our clients to identify somebody that they personally know. That, again, the way that, trust, right? It's that confidence they have in something, that they would identify somebody who would be their private trustee. And because it's a privately identified individual rather than an organization that provides the service by way of business to a lot of trust arrangements, we call those structures private trust arrangements, and then one of the vehicles would be private trust company. So the magical PTC, right? That a number of people mention.
Well, interesting. And I assume that, well, based on what you've explained, it's something that can be compared to a foundation, which you have kind of touched upon during this podcast today. You've mentioned foundation, but maybe you want to explain more what foundation is, and perhaps compare it a bit, because if we have foundation and we have a PTC, which one should I go for? I mean, this is I think a question that a lot of people might ask.
That's exactly it. I think there is, the market knows already, and I think a lot of family businesses, when they meet with their bankers, they meet with their accountants, and they sit and hear those terms. Oh, have you thought about a foundation? What about a trust arrangement? So when they come to us, they say, well, what are those animals? Tell us about it. And foundation is, again, a solution that could be very practical for family wealth structuring purposes, different to the trust arrangement. Foundation is a vehicle. It is an entity in its own right. And if we think about structuring wealth ownership through a foundation, what it actually means to the family is that the family would need to transfer the title to the wealth to the foundation, to that abstract, that construct that would be registered with the company's registry. And then, of course, they would derive benefits, but the title to those assets would not be with them. A foundation doesn't have the standard structure of management or supervision. It has it doesn't have a board of directors, it has a council. And the council of the foundation, in some instances, is supervised by the guardian of the foundation. Trust structures utilize standard companies under those solutions. So a private trust company usually will have a board of directors. It will have the shareholders who own shares legally, and it will have beneficial owners, those who have equitable title to the shares. So in many instances, we say this is option one, which is a trust. That's another option, that's a foundation. These two are often used separately. I would say in most cases it's one or the other to achieve the solution, and again, depending on the specific requirements of the family business, what arrangements they already have, because some of them may already have some solutions that will work better with the trust or better with the foundation structure. Then we make recommendations and we compare and contrast those two solutions.
Could it be, just for us to kind of understand a bit more about the difference, is there any restrictions of what type of assets can be held underneath these two different vehicles? Is there anything in relation to that is important?
Yeah, that's a good point. Under trust structures, there is quite a lot of liberty. Trust entities are companies like any other company. So I would say here there is a lot of freedom. We haven't come across clients saying, oh, unfortunately, my property in France cannot be owned by that, or my shares in a company in Dubai, for example, right? But with foundations, we indeed have to be more careful. Foundations can own real estate assets in the UAE, but foundations cannot own directly shares in onshore entities in the UAE. So usually for the purposes of ownership of onshore assets, we introduce a corporate entity underneath the foundation, for example. If we do a design of structures whereby the foundation was going to own assets outside of the UAE, if it's in other Al-Shamimi jurisdictions, we then, of course, coordinate with our colleagues. But if it isn't, then we check with the local council in the other jurisdiction to see whether there would be or wouldn't any restrictions on foundation owning assets in that other jurisdiction.
Very interesting. Well, thank you so much, Izabella. It's been very nice to have you here and to be covering everything technically from a family business structuring perspective. We've talked about how to create the structure. We've talked about the family office and the concept of it and the possibility of using a trust or a foundation or a PTC. So thank you very much for that. And I hope you guys have enjoyed this episode. Please tune in for the next one and we look forward to seeing you again.